Hey, what's up everyone? Welcome back to the channel. If you're thinking about buying a home, you've probably got a ton of questions about mortgages, interest rates, and how to even get started. Well, today I've got an expert with me to break it all down. I'm sitting here with Debbie Cowan, a top mortgage lender in Ocala, Florida, to answer the most common questions home buyers have and share some insider tips to how to make the process smoother for you. We're covering everything from pre-approvals to interest rates and even some of the biggest mistakes buyers make in the home buying process. So if you're planning to buy a home anytime soon, you're going to want to stick around. This is going to be packed with a ton of valuable information. Let's go see what she has to say. All right, Debbie, thank you so much for joining us today. So if you don't mind, go ahead and tell us a little bit about yourself and what you do.
Well, thanks for having me, Jordan. I'm so excited to be partnering with you on this video. So I'm Debbie Cowan. I'm with PrimeLending. I've been here about 8 years now, but I lie when I tell you how long I've actually been in the business because it really ages me. But I do mortgages. That's my thing. I help people get into homes, and I've been doing this about 30 years, and you can't stay in this business if you don't love what you do, right?
Oh, wow, that's exactly,
Yep,
yeah,
yep,
that's true, very true. So if you don't mind, I'm going to ask you a couple questions today, and
absolutely.
that I feel like will help the consumer out there looking
I
to
would
purchase a
love to
home.
answer
So
anything you throw it at me.
let's go ahead and start with question number one.
Okay.
So what's the first step a buyer should take when looking to purchase a home?
So, what do you think it is? No, I'm just kidding. Because I'll tell you, definitely, it's finding out their buying power, right?
Yeah.
So, the worst thing that happens all the time is if you don't, if you have a buyer that's not willing to possibly get pre-approved up front,
Right.
the challenge is that you're taking them out and you're showing them a plethora of different homes and price ranges. And of course, they're going to fall in love with the one that they probably can't afford, possibly, right?
Yeah, exactly.
So we always want to get a pre-approval first, and it takes such a short amount of time. I mean, we're talking we can do a pre-approval in 10 minutes.
Wow,
and let you know, okay, Jordan, this customer is approved for this amount. Go shopping, go have fun. And there's a lot of confidence in having that pre-approval in your hand, not just for you, but for the buyer as well.
Right.
Then the ability and the great thing for you is you're not showing them houses that are outside their budget, right?
Right,
And you're not wasting time for both sides.
exactly.
Pre-approval number one.
That is very true. So when it comes to the pre-approval, what documents do the buyers need to expect to have from you?
Great question. So it depends on the borrower. So, again, I do stress a lot of times that I've been doing this for so long. It's typically, case by case basis, but I would just throw out there's two things. One, if you have a buyer and you're taking them out and you're going to spend, a full day showing houses, and they're a W-2 employee, they've been there for 2+ years, they know what they make, they know what's in their bank account. I'm probably going to be able to do that pre-approval without documentation. Okay. Now, if I have a self-employed borrower that's been in business for 2 years and I need to see their tax returns, I'm going to ask for that first. I always try to make the process as easy as I can, but yet as accurate as I can be as well, too. So one of the things that I tend to see a lot of loan officers do is they want to gather every piece of documentation up front. Yeah. And I recognize and value your time, and I know you've got a buyer that's hot to go. They're ready to buy. So I want to, I've done this enough to where I know if they know what their income is, especially when and I think we just did one that was fixed income. They were on Social Security. Yeah, yeah, those are super easy. They know how much trust me, they know how much they make per month.
Exactly.
So it's easy to definitely go through the process a little bit easier with W-2 and Social Security pension type people. Right. Documentation, sometimes you don't have an opportunity. You've got a buyer that just came here from out of state. They didn't bring their documents with them. But it just takes a little bit, maybe I have to ask a little bit more questions during the pre-approval, but my goal is to get that pre-approval in your hand as fast as I can.
Okay, well, that's great.
And a good one.
Yeah,
a real one. And a real one.
We need good ones and real ones.
Yes, yeah.
So when it comes to the loan itself, what are the most common products that you use and what do you specialize in?
Well, I'd like to say I specialize in everything. PrimeLending has over 400 products. So am I an expert in every single one of them? No. But what I try to do is ensure that I know just enough, and then I have a great support staff behind me that can help me, guide me, renovation, VA, FHA, all the standard products that every lender has. I feel like I'm an expert when it comes to 55 plus communities.
Okay.
We know the 55 plus communities. We know those type of clients. We understand how they need to have a little bit more hand holding.
Right.
We know that they may not be technology savvy.
Right.
We like the fact that we're here local and they can walk in the door and talk to me.
Right.
But VA, one of our great things with VA with PrimeLending is we don't charge any of the typical bank fees for our veterans. So we take really great care of our VA borrowers, and FHA bond products. I mean, anything. Here's a great saying that we say all the time at PrimeLending. We have a product for everyone as long as they're willing to accept the terms, right? So you have your investor programs, your income, or just no income products. We have everything. So, but what I specialize is in great service, not necessarily the product. We're going to go through that process with the client and find the best option for them.
Yeah, absolutely. I know I speak to so many lenders from clients from all over the country, but a lot of times, they'll drop the ball and don't respond to my emails, and it's 2 weeks before closing, and then we're
You're
just
in a
sitting
mess.
there in a mess. So it's great to have someone local that can answer.
Well, not only that, but I think we still see about 60% of our buyers are coming from out of state, right? They're moving here.
For sure.
And it's all about communication.
Mhm.
So one thing that you may or may not know is we don't miss closings here.
Right.
So if I have a challenge, I mean, we educate the borrower upfront what we need. Once we get that contract, we're on mode go. And if for some reason that client's not responding, that's when I'm going to get you involved, and we're going to tag team them and make them sure they understand the importance. You should never have to ever worry that whoever you're working with, whoever the lender is that they're working with, is not on top of their game with that client.
Right. Yeah. And while we're talking about those products and different types of loans, what is your average day, from, let's say we go under contract to closing? So,
So it used to be, prior to after COVID, it was, the surveyors were so behind, the appraisers were so behind. But I always say, how fast do you need it?
right.
So there are the normal. I don't think I've seen a 45-day contract in a year.
Right.
They're all 30 days. I
Right.
mean,
Yes.
everybody wants to close quickly, and I just closed one just recently that was 2 weeks.
Yeah.
So
Yeah.
if we need it, and that's what I always want to press. I mean, I had a customer that had sold their house and they were homeless, and they found a house and they literally were staying in a hotel.
Right.
So that became an escalated. Okay, we need to get them into this in 2 weeks.
Yeah, for sure.
So that's what we could do.
Right. Yeah, absolutely. So I'm going to move on a little bit here, and let's talk about why is FHA a popular choice for first-time home buyers,
Yep.
and can you tell me why USDA wouldn't always be the best option?
Yep, couple different things. FHA, you're going to have a little bit of equity as opposed to USDA, right?
Okay.
USDA is 100% financing, so you're getting in it with zero equity.
Yeah.
FHA is really good for the clients that have maybe a little income challenge with their debt ratios. There are also with USDA, you have to go within a USDA eligible area.
Okay.
So it's not open. So if they're outside the city limits and that's where they want to be, that's great. But if they want to live in the city limits, it's not going to be an option for them to go USDA. USDA is also very, very strict on their guidelines. And so it's a two underwrite process, meaning we underwrite it and then we have to send it to USDA to clear it. So there's a little bit of a time challenge. So maybe you do need the 45 days or the 60 days for USDA.
Yeah.
Most importantly, credit score has to be a 640 with USDA, no exceptions. And you can't exceed a 43% debt ratio.
Okay.
FHA, we can go up to 50. No limits on where you want to buy. And the income requirements on USDA, where you have a family household of X, if you exceed that, you don't qualify. FHA does not have income limits.
Okay, I got you.
Yeah.
And then on the FHA, so How many times can you use that?
As many times as you want.
As many times as you want. So your first purchase, your
Yep,
second
you
purchase.
can use it continuously
And then I
throughout the
guess,
process.
correct me if I'm wrong, for USDA, you can only use it one time.
Well, it's funny you should bring that up, Jordan, because you must not have just seen my recent video. I said so. I actually found out. I thought you had to be a first-time home buyer with USDA. You do not. You can reuse it. Yeah, absolutely.
I think we just had a conversation a couple days ago.
Yep.
About that. I have a client that's down here.
Yep. So as long as they don't own a house currently, and or if their house is selling, you can still go USDA. USDA also wants a 2-year employment, requirement, typically in the area that we're buying in. So there are a lot of different restrictions on USDA than there are on any other product that we have. So if we have that customer that's a little bit challenged, where their debt, like I said, their debt rates are a little bit higher than 43%. USDA has no exceptions. So it's just cut and dry. It is what it is. 640. You got to find a house outside the city limits, and you got to make sure it's acceptable with their eligibility for the product and for the property requirements.
Okay, I got you.
But yes, you can own, and check out my most recent video that says I was wrong.
Right. Yeah. So let's go into a question that I think a lot of people, it's kind of been the talk of the year. What factors influence the interest rates, and where do you see us going the rest of the year?
Oh man, if my mouth gets dry just talking about this on a day-to-day basis,
we all get nervous.
multiple times. So what drives our rates are not what you see in the paper as far as the Fed is reducing by 0.25%. It's going to affect mortgage rates. It's not. It's the Treasury index and the Treasury bill. So our goal, if we had to go from year to year to year and go statistically and say, where were we in 2019? Where were we in 2020? Our goal is to have that T-bill below 4%.
Okay.
Right now, we're averaging about 4.3.
Okay.
So that drives the rates up. That's the cost of funds that it takes for banks to lend money.
Right.
So contrary to what a lot of people think, when right now, it's hard to get to what they call a par rate, which is 0 points.
Right.
And there's a reason for that. It's not because the bank's trying to make money. The bank's just trying to break even because of how the pricing is. Where are we going to be in 5 months? Well, I think we're going to see rate reduction. I truly believe we're going to see rates decline. If everything goes as what we've been talking to all the financial advisors out there and the people that know and do this for a living, if people don't realize this, the housing market, it controls so much of the economy, right? So we have to do things to number one, make things more affordable for the customer, right? We have to be able to give them an option to buy a house and still be able to afford it. And the only way to do that is either one, drive down the cost of housing, which doesn't seem to ever happen, right? Not very often unless you have a crash. Or two, reduce the interest rate and offer additional products that put people into those type of opportunities where they can buy. Right now, I thought literally come January 1st, we would see a nice dip in our rates. It has worked just the opposite. Obviously, there's a lot of things going on in the country right now with tariffs and the talks and all this, and all that just creates a lot of uncertainty. But at the end of the day, I would probably, if you want to do a video with me in November, I'll say, see, I was right.
Okay.
At the end of the day,
I
do believe we'll definitely have a 50 basis point drop in rates. And my goal, or what I tell folks all the time, we're in the high 6s, 7s right now. We're lower than we were last year. And so what happens when these rates go down is what's going to happen. It's going to drive inventory down. So the houses become more expensive. So you're at a crossroads. Do you buy now and know that you're going to have some instant equity when the rates go down, because now your house is worth more because the inventory is less, and you'll be in a good position, and then you can always refinance to a lower rate, but now you've got equity? Or do you wait and hope that the rates come down but the house marking doesn't go up? It's never going to happen.
Never going to happen.
So
I tell people that on a daily basis.
The only way that we're ever going to see a decrease in housing costs is if we have a crash. And that's not anywhere that anyone's looking. No one's talking about that. Everybody's talking about what do we need to do to make things more affordable for our buyers to be able to grasp that American dream of owning a home.
Right. Yeah. Yeah. So in today's market, how would one come to you to get the best possible interest rate? Is there?
It's not always about rate. It's always
Okay.
it's really sometimes. I mean, people think that that's because that's the first question you. That's what most clients think to ask. They
Right.
don't know
Yeah.
anything else.
Yeah.
But it may be down payment assistance. It may be money in the bank that they would rather have versus putting a lot down. There's so if you're not working with a lender that is going over all the different options, interest rate, can you afford the payment, right? That's a big thing. I can tell you that 95% of the time people come in and get a pre-approval and they get past that fear of just getting the pre-approval,
Right.
and then they know within a month they're buying a house. They're going into contract because they get excited,
Right.
and they
Yeah.
go, "Oh, I can afford this."
Right.
We have a new program out right now that we're talking about a lot, going back to FHA, which is basically 100% financing on an FHA.
Okay.
There's no income limits like there are in down payment assistance programs. The credit requirements are lower than what they are in Florida bond. But if you just keep that in mind as a realtor, that we know that we have to come up with things that allow people as first-time home buyers to go into and buy houses, that all these things are coming out. So you're going to see, I don't know how long you've been doing this.
For about 12 years now.
Okay, so
yeah,
you've seen the good, you've seen some of the good and bad. When it's bad, when rates are up, there are the people on the white ivory tower going, okay, how do we get it to where people can actually afford? And they're going to come up with different products to do that.
Yeah.
So homeownership is the best investment. No matter when you buy, no matter what the rate is, that's always going to be the best investment.
Right. Yeah. And while we're talking about the interest rates, again, I have a lot of people that ask, I'm going to wait until the rates drop. I always tell them that they're not going to drop to what they were before.
No.
Because I always refer back to when I bought my first house in 2016, I believe. The rates were 4 or 5%.
Right.
And I tell them, I'm like, we're not going to see that 2% anymore.
That was an abnormality.
Abnormal thing during COVID.
Yep.
So I think we're still trying to get people over that hump to understand.
And I think as a listing agent, when you're listing a house and talking to a seller, I mean, they're starting to come around to realize that those prices, the going over escalations, doing all this stuff is gone. This is our real market. So if we can get the rates into the mid fives again, I think you're going to see such an opening. But when is the best time to buy? It's now. And I mean, I'm telling you, because if you can afford the payment and you understand that it's almost a catch-22, that if you buy a house now and the rate's higher, the old saying, you marry the house, not the rate. Right. It's real, because you will be the first person that I'm calling going, hey, Jordan, it's time to refinance. Guess what? Guess the rates have dropped. This is a good time for you to do this. Now we're going to be able to drop your payment by X, and we're going to go through all that. If you wait till the rates drop, I mean, we have a lot of houses that's in the inventory now. You can remember during COVID, there were no houses. Yeah. And what did that do? That just caused the prices of the houses to go skyrocket, right? And people were going crazy. So the good news about us, we live in Florida. Everybody wants to live in Florida, right?
Absolutely.
So there is no chance that when the rates go down that people aren't going to be coming here in the droves again. It happens every cycle. So is it good? Can you, excuse me, can you afford a house at 4%, but it's $200,000 more? Or can you afford the house today and it's $200,000 less, higher interest rate, but you can always refinance when the rates come down.
Right. Yeah,
so
absolutely.
That it is the best time. And I'm telling you, people are starting to really understand that.
Mm-hmm. Yeah.
The buyers are out there again. They're understanding. They got tired of waiting. Maybe it hasn't moved as fast as they wanted to. So now the discussions, they're talking again about buying even at current rate. And again, what people don't realize, I mean, in 2024, we were in the mid sevens, almost at 8%. So they have come down.
Yeah, absolutely.
Yeah.
So that's really good.
I mean, so contrary to what people think, they have already come down. Now is the time to buy. Don't get caught up, because I promise you, I've seen it multiple times. There's always a cycle in our business. We're in the cycle right now that really is a good buyer's market, not only because you're going to be able to acquire equity, and when the rates go down, your house is going to be worth more and you can refinance. But what are you seeing? I mean, every single contract I get right now has seller concessions.
Yeah, they're either seller concessions or we're coming in, a lot lower than asking price.
Right.
And we're
And
seeing a lot of stuff sell for about 97 to 97.5% of asking. So that's a good
and
chunk.
that's a good chunk. But think about this. If you could leave the purchase price alone,
Yeah,
instead of saying 3% off the list price and give 3% in concessions, two things are going to happen. One, you're going to save the market, so we're not going to start seeing lower appraisals and
Yeah.
dumping houses. But two, these buyers in today's market, they want something in their pocket.
yeah,
They want to know that, hey, I got this house and I got 3% closing costs to buy down the rate or
Right.
do whatever they want to do. I can honestly say that 60 to 75% of my contracts right now all have seller concessions, and that's I had to talk to the listing agent, and I had to say, quit dropping your price, because that is a buyer's psyche.
Right.
You keep reducing the price, they think you're going to keep going, right? And they're still going to ask for seller concessions.
Yeah, exactly.
So go in with seller concessions. They feel like they got a bargain,
Yep.
and that's hard money out of their pocket they're not spending, and it's a win. And then at the same time, we're keeping the values where we need them to stay.
Right. Yeah. Well, I had a lot of strict questions to ask you today, but as the conversation
This is how I am.
They're kind of flowing. So
yeah.
I guess that kind of takes me into, with all the recent changes in the real estate world, about sellers not having to pay buyer agent commissions. Are you guys able to finance that into the loan for the buyer if the seller can't
pay for
their own agent?
So
we still want buyers to be able to have their own agent.
Yeah. So no, that is definitely a buyer's cost that we cannot cover in the loan. Not to this date yet.
Okay.
Fannie, Freddie, FHA, no one is saying that we'll cover that. Everybody asks me that.
Yeah.
But in reality, and again, I'm just speaking on what I see here,
Right.
and with the team here, I mean, I think maybe I've gotten 2 contracts where the buyer actually paid the commission. It was conventional, they had it. Or they paid maybe 0.5% of the commission because they wanted the buyer's agent to get 3.
I think on my transaction we did that.
Yeah. So I mean, it's very few and far between that. I have some agents, and a lot of them are with Keller, that literally won't list the house unless they're telling the seller they have to pay it. It's always been paid by the seller.
Right.
So the where it gets crazy is just having that conversation with the listing or the seller, saying you've always paid for it, and you're going to get more traffic by doing this, because everybody's going to, whether or not they're not supposed to, scare people. But at the end of the day, most buyers right now, their biggest issue is affordability.
Okay. Yeah.
So their biggest issue is that they don't have a lot of money to put down, and they certainly don't.
Exactly.
So no, to answer your question, we can't finance it in.
Yeah.
Not yet.
Yeah. No.
It could happen.
That question comes up a lot, so I wanted to ask.
I wish it did, because there have been times in my career where I've seen like Fannie and Freddie come back and say, okay, we'll lend 103% of the value of the property to cover certain things. Just hasn't happened. And I think it's probably, unless you guys are out there screaming and hollering with the lobbyists saying, these sellers aren't doing it and the buyers can't afford it, it's going to be, it's legislation. It's all legislation.
Yeah. Well, that's going to take me into one of our last questions.
Oh, that was fast. Wait till I do you.
When it comes, let's just go back to home buyers for a minute.
Yeah.
What are some of the biggest mistakes that buyers should be aware of, so they don't make the same mistakes as some other people that have
listen to your loan officer. There's a do's and don'ts when you're in the buying process. Biggest mistake is quitting jobs in the middle of the process. And even though you're getting a raise, even though you're getting a new position, it could cause a kink, because we're going to have to get documentation to prove that it's permanent and this and that. Going out and buying a new car before we close. I say it all the time. There is a little, genie out there that once you apply for a mortgage, we get notification when you open new credit. You cannot hide. You cannot hide.
So no new cards.
No new credit. Open.
Okay.
Can you use a credit card that you already have? Yep. Can you max it out? Yep. Don't want you to, but could you? It's all about opening new credit. It's all new credit. But really, the two biggest mistakes are changing jobs in the process or opening up new credit.
Yeah, absolutely. And then last, if you could just give one piece of advice to home buyers, what would that be, Debbie?
Buy today. Buy
today. Okay,
buy today.
You guys heard that here.
Yes, buy this.
Buy today.
Yeah, don't wait. This market's not going to get better in all different directions. It's going to get better only in rate, but not in the values.
Right. Yeah. All right. Well, Debbie, that's fantastic advice. Thank you so much.
You're so welcome. I'm so excited for you to do this.
So much from you. So.
Yeah. And anytime, if you guys, ever have any questions in the future, feel free to reach out.
All right. Perfect. And I'm going to leave Debbie's information in the section below, down in the description. So if you have any questions about mortgages, be sure to reach out to her. She is amazing.
And buy from Jordan.
There we go.
I'll give you a high five.
All right, guys. Well, that's a wrap. If you're thinking about buying a home, reach out to Debbie for any information about the mortgage process. Her information will be in the description below. And for everyone watching, don't forget to like this video if you found it helpful. Subscribe to the channel for more real estate tips and drop any questions you have in the comments. I'd love to hear from you. Thanks again, and I'll see you in the next one. Take care.